Hi, my name is Adam Moqtadiri, real estate broker with Home Life Bayview, advisor and investor in GTA real estate. In this video, I want to give you an update for Q3 2022 on the GTA housing market. And if you live in the city or in the GTA, you know prices have been crashing pretty hard. In the table that I prepared, you see that average GTA prices are down around 19%, Toronto is down 15%. And as you go far out in the suburbs, the price declines are even more severe, like in places like Newmarket, Oshawa, Burlington, it's above 20%, 25, some places 30%. So why is this all happening? You might ask. Well, the answer is pretty simple. What's happening is because of inflation, the Central Bank of Canada is forced to aggressively raise rates, and that's what they've been doing in the previous months. And for those of you that know how real estate works, when you raise interest rates, higher prices become less affordable and prices start to decline. As you can see in my next chart, there's almost a perfect correlation with when the Bank of Canada started raising rates and at the peak price, and the price declines ensued from then on. And in the month of August, interestingly enough, the only month that the Bank of Canada didn't raise rates, prices started to plateau and we had a pretty strong August. So basically what is happening, because of the higher interest rates, homes are less affordable in terms of mortgage payments. So if you look at the table that I prepared, I've compared peak prices in February of 2022, just before the Ukraine war and before the raise in interest rates started, and comparing, the mortgage rate at the time on a variable basis to prices today and mortgage rates today to get the payment difference between the two. And you can see that from February peak prices, even though prices have come down around 19-20%, your mortgage payment is higher by 19-20%. So on a relative basis, for people that are taking out on a mortgage, which is majority of the people, homes are around 20% less affordable on a mortgage payment basis than before. And what's essentially happening in the marketplace, because of the unaffordability nature of the mortgage payments, there are less buyers and those buyers are forced to rent, and there are more sellers. Some of them are distressed, they just can't afford their mortgage payments. There's a bit of an economic turndown. People are either panicked or they're actually distressed, so they have to sell. And because of that disparity, there's more inventory because homes are coming to the market, but they're not selling. So the inventory keeps building. Despite of what I've said, we still had as I said before, we had a pretty strong August. So we'll see what September has in store. But as it stands now, we have much higher inventory than we did last year. So I know what you want to be asking me right now. The number one question in the market is, are we at the bottom or near to it? I mean, nobody knows, but from my 2 cents, we are a lot closer to the bottom than we were 6 months ago. And for those of you that know me, I've been pretty pessimistic about the markets since January. And after all this price decline, I'm starting to become more bullish on the market, and I'll tell you why. I know we're gonna have a few more rate hikes, but at the same time, what I'm seeing in the marketplace, and it's not in the stats yet, I'm seeing people are making more money than they did last year because of this very strong labor wage increases over the past few years due to inflation. So I know mortgage payments are going up, but at the same time, salaries and wages are going up at the same time. So at some point, this will balance out, the market will plateau, and we will see price increases anymore. But in the meantime, we got probably 75 basis points coming up in September. At the time of this video, we don't have that knowledge, and probably 0.5% more by the end of the year. So if you ask me, are we at the bottom? I would still say no, because I know the rate increases that are coming, they're still gonna impact the market, and it still takes time for those rate hikes to show their impact in prices. So what does this mean to you as a buyer? As a buyer, you know, I think we're closer to the bottom than one would think. So you need to start like looking now. So in a few months, when you think the time is right, you're ready to pull the trigger. You need to be talking to your mortgage broker or mortgage advisor, who you're working with, see how much mortgage you can be getting, start seeing properties, see what kind of properties you like. So you don't want to be waiting for too long, because before you know it, we may see a bounce in prices. But if you're a seller, I mean, you know, you waited this long. If you're in a distressed situation, I suggest that you sell earlier now than in probably 2-3 months. But if you're not distressed, I would write this out. Don't panic sell. If you can hold on to the property, you know, with all the money printing that will be coming over the coming years, I think it's a safe bet to hold on to your property. I hope you enjoyed this video, and as always, if you have any questions, you better call Adam. Thank you.